All right, good morning, everyone. Happy Wednesday. Hope you all are doing well. Let's take a look and see what Bitcoin's doing today. On the daily time frame, it looks like we have a nice strong wick upward from the dump last night. So we did have a dump down to it looks like around 64,540 area. And we've since bounced from there. So that's a really good sign for the day. Um, I would expect before the Fed meeting having a little bit of a retracement down here, maybe bouncing off a 786 level. We'll dive into that a little bit more. But for right now, I like to see that we've had some strong sensitivity from, right before basically the 64,410 that I've been targeting. That's our first kind of support level as we make our way down. So that's a really good sign. Let's take a look at the weekly real quick, since we haven't really done that this week. So taking a look at the weekly, I'm still of the mindset that this can flip to a bullish candle. It is kind of time-wise, messing with me a little bit just because of the fact that we're now basically at Wednesday, and Monday and Tuesday we were trading above the weekly open and kind of using it as support. um, Usually when we have a bullish week, you want to see, our bottom being made on Monday and Tuesday and not our top. And instead our top is being made. So timeline wise, that usually means that we're going to have a bearish week, unfortunately, making our bottom on Thursday or Friday. But I'm going to be open-minded since we do have a Fed meeting today, and that's a pretty major event that we can possibly flip this back to being a bullish candle. So that being said, for the weekly, definitely difficult to tell whether or not the bottom's in for right now. We did kind of front run the 64.4, which is not the best either, since that was a 786 level. So, um, for right now, though, I'm gonna have a positive attitude and, believe that at least for now the bottom is in. But definitely can flip bearish today, or within the upcoming days. So let's take a look at the 12-hour here. The 12-hour kind of shows this cup and handle formation, right? So that is a very bullish type pattern. This could be, a nice tweezer bottom here if we can get it to close like this. Um, but again, like I said, we really have to, hold the 64.4. If we drop below it, then we're going to start getting into 63.372, down then to 62.146, that type of thing. This is just going to cascade down. So if we don't hold this, I'm more apt to saying that this will probably be a bearish week. So this is kind of my line in the sand for today is 64.410. Moving down to the 8-hour. So another bullish sign that we have, at least for now, is that we're bouncing off of the 21 MA with some strength. So you can see we wicked down to it. We found a lot of sensitivity there, so that's a really good sign. That could be, our handle formation that will allow us to come back up and basically take out, hopefully getting above our value area low, which is also our weekly open practically, and getting back above there and then retesting 66,482 or even going higher than that potentially. So hopefully this is kind of where we're at. We'll check liquidity, see kind of how that lines up, but that's what I'm expecting for now, just looking at the chart. The 4 hours, obviously does look like it's going to be in a bullish state. This is kind of a falling wedge pattern. Um, this could be a potential tweezer bottom. So if that does happen, one of the things that I like to take is potential, long position, not financial advice, but I have done this before in the past and it's worked out for me. I haven't, obviously I haven't actually ridden it up to the measure move all the time. But you could expect possibly taking out this double top, even if you were to do that. That's like a 3 to 1 risk reward ratio, a little bit above 3 to 1. Um, so that is a possibility if this does stay bullish. That's a chance that, you could potentially take. I might be taking that as well if this does close like this. So just kind of keep that in mind. I'll be looking for the next 2 hours to see how this is closing. Um, 1 hour time frame. So on the 1 hour time frame, we definitely want to see, a strong move back above this. Like I said, this value area low. We do not want to see resistance here. If we do see resistance around the 65,705 area, there is a potential, because that is a bearish 786 now, there is a potential that we will continue dropping lower. So, when the Fed meeting does come, if we do get back up here and test this and we're not seeing a strong move through this and we're seeing sensitivity, um, that could be a great entry for a short to take us down further. So just kind of keep that in mind. These two levels I will be watching very closely today at 65,705, the value area low, and then 66,482, which would be taking out to this double top at 66,250, and it's another bearish 76. So those are two levels that I will be watching closely. We'll see how liquidity lines up with that right now. So let's go ahead and take a look at liquidity and our order book. So taking a look at our favorite tool, Trading Different, for liquidity. By the way, guys, I do have a Trading Different code that you can use for 10% off. I am affiliated with them, so use tradingdifferent.com/code/Sean to get your 10% off discount. Highly recommend them over all other liquidity tools. I've tried Bullvision, I've tried Bookmap, and it definitely is the best one since I am able to see a TradingView chart and draw on it. So I highly, highly recommend having it in your toolbox. So anyways, guys, when it comes to the daily, um, we do have more liquidity down below us that we started dipping into. This does unfortunately resemble somewhat of a bear flag, that's starting to break down. On a positive note, it's not breaking down strongly yet, so there is a potential that it's gonna be faking people out and it will actually reverse here. Um, the only thing about this is that I would have liked to see a deeper 786 retracement prior to reversing if we are going to reverse. So this does kind of give me some pause. It could be more that we're in a bullish macro trend now, so we don't necessarily have to drop this low. But, for my model, I would be expecting that we drop to, 62,162 area if we were to take that 786. Um, if we get down there and we do bounce, that could still be considered bullish. But like I said, if we are in an extreme bullish environment now, we may not drop even that low. We could even kind of bounce from here. So we'll have to wait and see kind of how that plays out. Let's go ahead and drop into our 4 hour. So our 4 hour, let me check off some of these other liquidity pools here. I like to only look at the 25x really on the 4 hour unless we start taking the 10x. So you can kind of see that we do have now this 63, 64-ish to 63.5-ish area of liquidity, concentrated liquidity now to the downside. So we could potentially be taking that out. I believe there's a double bottom right there. So we could possibly even bounce from here. We could take this out and bounce. This could be taken out today if we can't hold that 64.4. So just kind of keep that in mind. We do have quite a bit of concentrated liquidity above us, all the way up to about almost 70,000 at 69K level. So that is a very good sign. Let's drop in though. I'm more curious about the 1 hour and the 15 today because that will be more so what the FOMC meeting will be targeting probably during that time. So taking a look here, let's make sure 100x is the only one checked off. That's perfect. So 64.4, in my opinion, still could be in play. We still have a little bit of liquidity right here, and then there's a gap down from there to that 63.5-ish area, which shows a lot of concentrated liquidity. So for right now, if we do take out this bottom, I want to see us bounce off of 64.4-ish area, and basically keeping this 200 MA on the 1 hour, okay? If we drop below the 200 MA on the 1 hour, that's when you have to target the 63.5 and then further down to that 62 area that I was talking about. Let's see, if we check off the 50x, I mean, you can see we have a lot of liquidity to drive us up, and we have a lot of red liquidity at 67.6-ish, it looks like. So this could definitely be, if this is a cup and handle, this could be a catalyst to drive us up. I mean, we have a ton of liquidity up here. I'll be showing you the simple map through Trading Different as well, and that will probably show some more concentrated liquidity, more so to the upside, at least locally, rather than to the downside. So, anyways, that's what I'm seeing on the 1 hour. Diving into the 15-minute, we'll also compare the order book to that. So the 15-minute, It kind of shows the same thing as the 1 hour. We did just take out this pull. Would like to see us hopefully kind of, um, consolidate right here. If we do get rejected, possibly coming back down to 64, 670, it looks like we could take out this little bit of liquidity and then maybe continuing our way up. Um, 50x, does kind of have liquidity on both sides that we could be, moving down through. There's a lot of bridges on both sides. So I would probably for right now stick with 100x if you guys are using trading different. Um, Unfortunately now, because we lost that value area low, that 65 6-ish area, which we do have a little bit of liquidity to 65 700, will be used probably as a form of resistance. Hopefully we can just drive right through that back into that fixed volume profile range that we've been in. But definitely look to see how we react off of the value area low today. It looks like we're slowly kind of coming up to it as well. So that's going to be a point that I'll be looking for today for that. As far as the order book goes now over here, you can see that we don't really have, we have this big order down here around 64.3, but that could potentially be used as support. We don't really have a lot of huge orders up here until 68,000 it looks like. So at least for right now, there's a lot of times where orders will come in and there'll be big orders that could be acting as resistance. But for right now, it looks like there's more of a chance that we continue higher, especially taking out even, for right now up to the 67 level. Not that we're going to get there for right now, but I'm going to be watching this and kind of monitoring this. This is called Kiyotaka. It's a free order book tool that you can use. So I believe you just have to create a Google account for the most part, or sign in with your Google account, and or you can create your own Kiyotaka account. But this is a free tool that you can use to kind of see where orders are. Okay. Let's see. So that being said, let's go ahead and move into our simple map with trading different. So we go into the liquidation heat map, go into the simple map. Um, yeah, so you can kind of see visually, this is kind of the same thing as that liquidity chart that we saw that was, a trading view style chart, but laid out for you in more of a graph format. So you can see that there's more, at least for this from the scalping perspective, which is more so our 15-minute or 1 hour time frames. You can see that there's a lot more liquidity to the upside. Okay, once we get past, 67,200-ish, you start diving in more into this more concentrated liquidity up here. There is a decent amount to the downside. More so short-term 100x, so this could definitely be taken out, like I said, making that 786 drop. So I'll be, kind of looking to that today. But again, like I said, once, during the FOMC meeting or after the FOMC meeting, I'm hoping to see us move up in, on the price scale here. So basically starting to take out the 65 area, through 66 and whatnot. So, definitely testing the 64, 6480 area would be our bullish case. I'm not sure if we're going to get past that. And again, like I said, we got to be entered back into the value area range that I've been targeting. So 65.6, really, we need to get back into here and then, slowly work our way up. We can't be using that as resistance. Otherwise, that will be taking us down more from a bearish 786 level. So those are kind of some areas I'll be targeting today. Looking at this from a bigger time frame perspective, so this is the swing perspective. This will be more so your 4 hour, your daily time frame. Um, we definitely have a lot of concentrated liquidity down here, more so than to the upside, unfortunately. So on a bigger time frame basis, this does tell me that, we're more apt to be moving down rather than up. The only saving grace that we have for moving up is that there is more 25x liquidity. So there is more larger liquidity moving up rather than down. This is more of your 5x, your 10x liquidity. So there's less concentrated liquidity moving down. This is more so just kind of your 3x and your 5x, which is a good sign. So we definitely want to see that there's more 10x and 25x moving up. That kind of gives us a sense that, the more concentrated liquidity and the higher leveraged players that you have on one side, the more apt the market's going to tend to want to go in that direction. That's what I've noticed so far with trading difference. So that's definitely a positive that we have more, basically higher liquidity players to the upside rather than to the downside. But, like I said, there is still more 3x and 5x to the downside, unfortunately. So there is a potential that we could still be moving down. The bottom's not in yet. We're not 100% sure for right now. But that is a possibility. Anyways, guys, that's what I have for you this morning. Hope you guys found this informative, and I will talk to you guys later. Take care.